Hello, family. Welcome back. If we look at today's month, we're going to be in the second week of this month, heading on Wednesday. So, this is what I do, or you should do as well, when we're approaching Wednesday. We know Wednesdays give us midweek reversals, and that will benefit us with the box trading method because Tuesdays will give us our second legs for the weekly cycle trap. Not on the weekly time frame, but the weekly box trade trap when we look for setups at last week's high and last week's low. For today's example, or this week's example, if we head over to our Renko platform, okay, I calibrated to represent the 1 hour, half hour, not exactly the 15-minute chart, just so that I can have a bird's eye view of the price action on the 15-minute chart. So just to do a little quick breakdown, when we do come on Monday or Tuesday, we want to make sure that price is at last week's high or low. Not exactly at last week's high or low, but we want to see price auctioning, trading at last week's high or low. So you may say to yourself, well, Kai, how can I make sure that I pick a pair that's going to behave properly at the last week's high or low? Well, what I do, I look for pairs that would basically start on Monday at last week's high or low, and I want to see a fractional disparity among that. So what I mean by fractional disparity, or when I incorporate this with last week's high and low, what I'm going to do is I'm going to head to my majors before I head to my cross pairs. I want to look at my majors first. What are my majors are doing according to the box trade method? As we can see on Monday's price action, they immediately auctioned or started at pretty much last week's low, but you can see that the market makers, they quickly broke out bullish for the beginning of this week. We see that with NZD USD, they broke out. They did not want to retest last week's low, and the other pairs follow suit. That's fractional disparity. Disparity is when we have a pair like this. We have a pair that's auctioning and is kind of consolidating. It's not moving anywhere. The market makers are evaluating their books and seeing what type of traders can they manipulate. Okay, so when we head over to our JPYs, because we just looked at the majors, and the majors didn't really give us a good chance to participate in this move, in this bullish move. So we're looking at the cross pairs, the JPYs. So we see that the JPYs, they opened. How can we know that they opened at the top of the range? Well, you see this line right here, this black line. That's the opening price for the week, and this line right here. Let me bring up my mouse. I need to use this more often. Let me switch over to the arrow and turn that on. This black line right here and this black line right here, that is the PSR, and this bold black line, that's the middle of the PSR. This is just the opening price. Okay, and market makers are going to use that to basically reset. I know I heard that market makers use that to basically use that as a balancing point if you follow ATS methodology. But back to the gist, market makers are going to pretty much throw disparity with a group of cross pairs such as this. When price is not going anywhere, going to see consolidation. Okay, so that's what we want to see that's what we would like to see on Monday, because if they give us that, then we know that, well, for this particular instance, that's the first leg. Okay, so when Tuesday happens, we want to see that second leg on Tuesday develop like this price action right here. This would have been nice if we had this price action happen exactly at last week's low. At last week's high over here. Like this price action over here. That would have been nice. But we will say to ourselves, well, this is just a type 1 stop hunt at last week's high. Why? Because price has broken out, just like we would have our normal type 1 on a 15-minute chart on the Asia session box. Okay, it's just that when we have this consolidation at last week's high or last week's low, it's more powerful to see that they're holding price there. Okay, yes, price has broken out, but we know that we're going to have M's that's offsetted, like this M. You see this first leg of the M right here, and this second leg of the M was kind of offsetted to happen lower, right? And this second leg of the M happened higher, right? So again, we want to make sure that we see some type of consolidation or disparity and see what our majors are doing. If our majors are already in a trend phase, that's fine. That's going to tell us that we should be going to the cross pairs and see if we can find some disparity, because that disparity is going to give us that order buildup. It's going to give us that fuel for our second legs to get into the profit phase, to come out of the manipulation phase to get in the profit phase. Okay, so JPYs, I seen Euro JPY. I traded this first leg on a Monday. I'm going to be honest with you, I didn't remember about the possibility of Tuesday acting as a second leg. I was happy what I seen on Monday's price action, and I took that in late New York towards the opening of Asia, and my TP was like around here, but I didn't stay up. I'm sure my TP, it was way overblown because I was only supposed to make 4,000, but I had it to just a normal 50 pip because I was just I'm used to that. And the market fluctuated, and luckily I did cash out when I did make the previous video. I did cash out and pass my challenge. But if I have not done that, I would have got stopped out with the second leg. Okay, and Steve tells us if we get stopped out on the second leg after we evaluate the first leg, just wait for them to stop hunt for the 15 pips to 50 pips. Okay, so my stop loss was around here, and I had the exact high. But if I would have held that trade and ignored whatever I was doing on that day, I would have got stopped out. But I would have enough confidence just to wait for that 25 to 50 pip stop hunt and get in on the second leg, even though I should be getting on Tuesdays. Okay, so yeah, again, first legs on Mondays. Steve tells us we can trade first legs, but just be aware that we're going to be having a possible chance of dealing with an offsetted M. Okay, but nevertheless, we are second leg traders by default, so that's nice. So just for instance, like I said, if I would have got stopped out, I would probably not trade Euro JPY because I would have seen this price action. I would this AUD JPY would have automatically told me, hey, this is a type 1M. We have 3 levels of rise. We have our peak formation, V. We didn't get another V, so this is probably a level of consolidation. And this price action over here would have told me, oh, this is our double top right here, possibly a triple top to get in for the sell. Okay, and that's that. So if we head over to our CHF, the CHF column or row, we can see that market makers was doing some type of tomfoolery, okay? Because they started with GBP they started at on Monday at last week's low, when Friday gave out a double bottom for the buy, and we probably would have got caught up with this move. But like I said, with Renkos or with this monitor or with this terminal, I'm just having a bird's eye view. When I want to see detailed price manipulation, I will head over to my other terminal, which I have the same setup, but it's just regular candles. We're going to head over there for in a moment. But I just want to show you my mindset when I do have these Renkos. And you can't have these Renkos when you do download my files. You do have a 2-week free trial base. You don't have to do any type of registration. Provided by the company called ovo.io, I believe, but you get the full website. If anything, let me just do that. I'll have it in the link in the video. But yeah, so we're looking at our CHF is in. It's kind of sloppy because the other CHF is, they're not like Euro CHF. They're starting at last week's high. AUD CHF, they're starting in the middle of the box, and in the middle of the box, you don't want to get trapped in the middle of the box. But I like to see when price does start at the middle of the box, because when price does come in the middle of the box and go to last week's high, let me see, and when it go to last week's high, this will give me enough confidence that they're going to be doing some type of manipulation of the breakout traders, instead of starting at last week's high and they're just pausing there. That's just giving them enough reason to offset the second leg like that. So that's another thing. So don't trade. I mean, if you're an expert or you have experience of trading in the middle of the range, like the type 3s, then go do that. But I'm just saying, when we stick into textbook rules, you see that if we're going to trade in the middle, price is not doing anything. Price is just consolidating. This pair is in disparity. We want to see if the price is going to open. We want to see this price action. Okay. We want to see them immediately go down to last week's low or last week's high, because why? They're going to be manipulating the breakout traders at the perceived support and resistance. This is a double bottom. Look at that double bottom, right? So that pair, that was nice to go on for a buy. I wonder if that was late in New York. New York and on Monday. But we're going to look at that in a moment. And then we can see with our other AUD pairs that this gave out a type 3 weekly W trap. Okay. All right. I understand that. But I want to take, since we're doing the box trade method, I want to take textbook box trade method trades. And this is why when you do take textbook market maker trades, you're going to be able to pass your challenge, or you're going to be able to start from $50 and be able to afford a challenge. That's all I was able to do. Okay, I started with $50 and I was able to make it to $400, basically $500, and invest my profits into a prop firm, because I want to be able to make 20 to 30K now. I don't want to, if I can afford it, I'm gonna do it, basically. Okay, I have to explain myself to you what I look like. But yeah, so now we did our little wrinkle breakdown. Now let's head over to the 15-minute charts. Since today's Tuesday, we're going to be looking at today's price action for Tuesday. So again, since we already looked at Monday's price action, let's head over to our 15-minute charts and see what was the drama, or we can see what was the opportunities for Tuesday. Since we know that they're going to be possibly setting a second leg at last week's high or last week's low on a Tuesday, I'm not going to be surprised. I'm going to be expecting a fake out. I'm going to be expecting a stop hunt, a type 2, or a type 2, a type 1, or a type 3 W towards the most recent high of last week, since we already deemed the euros to be at last week's high. So I'm not surprised at 3 a.m. to see this evening star or morning star. I don't pay attention to candles price, the patterns. I just know my M's and W's, but I know about that. That's a evening star. Okay. But to be more clear, at 3 a.m., okay, to 1 to 3 a.m., we want to see this price action. We want to see that W. Okay, that's 50 pips right there, right off the bat on NZD USD. Would I be focused on NZD USD? No, because my eyes was glued to Euro JPY, and NZD USD was not at last week's high. Even though the trend is up, maybe I could have bought that. Yeah, 9 times 10, I would have bought that, but I was focused on Euro JPY on Monday because I found that M. I was happy with that. But nevertheless, since we're on Tuesday, like I said, that's a good trade. AUD USD, that's a good trade. Let me turn on the mouse. Okay, that's a good trade. That's a good trade. Okay, when you wake up at 1 at the edge, this is Asia box. That's 1 a.m. and you wait till 3 a.m. to 3:30. You can do that, or you can wake up at 3. You can wake up at 3 and stay up for a half hour and get your money and go to bed. Like I used to do that. Wake up at 3, stay up for a half hour. If I see that, that's the Brinks trade. Okay, that is the Brinks trade on a 15-minute chart. So if you miss the weekly trap, just know that you're going to be making money on a 15-minute chart. I mean, on a 15-minute manipulation traps. Okay. Why? Because you have the Brinks trade. When you find that second leg within that shadow box, and this is a type 2, type 2 W buy with the prevailing trend to be up anyway. Come on now. You got your money. Okay. You got your money. But when you staying up, I know it's probably going to be challenging to just, pop in these markets at 3, and you're probably going to be chasing trades. So that's why I just say, like, it's kind of smart when Steve, it was smart for Steve to tell us this. Wake up at 1 and trade the edge of the Asia box. Okay. So again, for our AUD pairs, I just want to come down here and focus on these pairs. There was nothing for us. There was really nothing exciting. It was just a breakout, a possible New York reversal, or a possible type 1 London reversal. But nothing panned out for us there. Okay. Why? Because we're focusing on the JPYs, because we know that the JPYs are at the extremes. So the JPYs are doing a little bit more manipulation, but nevertheless, like I said, our big pairs that was sticking out to us were our majors for the type 2 W buys, and that's fine. Just know that if you buy these pairs if you would have bought this, where are you going with the buy? Please tell me. Why are you going to buy that pair and you see this price action? Let me turn this off. Damn it. Clear. And you see this price action. What pair was that? Euro JPY. You see this price action. Why are you going to buy the high? Don't be manipulated when other pairs are breaking or they're making new highs. No, because there was no W present. I mean, you missed your W down here. You missed the low of the day. This right here, you could have bought that. But again, why buy this pair when you could buy these pairs if you want to be, hard-headed? Okay. Wait till Wednesday, Thursday, and Friday to trade the Asia box trade traps, because you have an opportunity to have a 100 to 200 pip profit target with these type of setups. Okay. This is 50 to 60 pips right there. Okay. Okay, you making monies. You making monies. But you know what I mean. So again, I'm gonna go to bed right now, and I'm gonna recheck on the Asia Open for Wednesday, and we're gonna see the opportunities just for Wednesday, and we're just focusing on the Asia trap now, the trap price action. Okay, but I just wanted to show you this, what my mindset is when I do have my wrinkles, especially on the other terminal when I do focus on the indices.